What is going on, investors? My name's Emmanuel. Happy 4th of July to all of my US audience. I hope you guys had a great time, but we are back to business. And in this video, I've got important updates regarding 3 stocks that I'm invested in and 3 stocks that we follow closely on this channel. So first is to do with Tattooed Chef. Of course, it's my largest position. I've got some information regarding Tattooed Chef. Also, we've got Baba. Okay, Baba's been hit hard over the last 5 days and it's for good reason. So I'm going to give you some more information with regards to Baba. And lastly, I want to talk about HIMS. And I'm going to leave HIMS towards the end because there is so much that has transpired with this company. But yet this stock has been beaten down. It's not even funny. So I'm going to go through all of the fundamentals that has changed over the last couple of weeks. And I'm going to provide you with some more insight with regards to the short volume surrounding HIMS, because I think out of all of the companies I've invested in, this has the highest level of short volume I have ever seen in any stocks that I've invested in. And this is not counting penny stocks, by the way. But before we dive into the updates, I want to share with you something that I shared on my Twitter. If you don't follow me on Twitter, it's at Emmanuel Finance 1. Check me out on that. But this was some value that I read on the Psychology of Money. You know me on this channel, I like to drop some gems for you guys. So The Psychology of Money by Morgan Housel, definitely worth a read. I'm loving this book. I've almost got done with it, but this really stuck out for me and I put it on Twitter and I figured I'll share it with my YouTube community. So I highlighted this part here. If you want to do better as an investor, the single most powerful thing you can do is increase your time horizon. Time is the most powerful force in investing. I know we're a microwave generation, you know, we want profits now, but you know, Kathy Woods and many other investors have spoken about increasing your time horizon, you know, 5-10 year time horizons. I gave my Tattooed Chef breakdown where I think Tattooed Chef will be in 10 years from now. So I'm talking 2031. And this is just me exercising this fact, because if we get so caught up in the short term, you know, the day-to-day gyrations of the stock price, we can be very demotivated and maybe we'll take even smaller profits. If we're up 5 or 10%, we cash out and miss out on 500 to maybe 1,000% gains in the stock market because you have a short time horizon. And I also shared this on Twitter, this quote here. So selling for quick 5 to 10% gains can give you a good income, but holding for 500 to 1,000% gains is how you build wealth. Okay. And I truly believe that. So bear that in mind as we dive into the update. So first up, Tattooed Chef. Now, Tattooed Chef informed us that they will be doing a website maintenance, okay? And as a result, the website will be down for 2 weeks, okay? And at the time, they had a banner going across the header informing us that they can't take orders and the site will be down or something like that. But a lot of YouTubers, a lot of investors made a big deal out of it. I mean, if a company wants to update their website, I don't see what the problem is. I mean, I saw some shareholders talking about, oh, it shouldn't take 2 weeks. To be honest, it didn't even take 2 weeks. I think it was down for like 5 or 6 days. But even if it did take 2 weeks, I mean, I'm not a website maintenance designer and I don't really know how long these usually take. And I'm sure 99% of shareholders that were moaning or complaining about this have no experience with website maintenance, especially with a company like Tattooed Chef, where we're now seeing an increase of sales volume. And I'm sure a decent amount of the sales volume is coming as a direct result from the e-commerce side of the business. So if the company felt like they needed to update the website, I don't see that as anything wrong. But with that said, I mean, the website is updated now, the banner's gone, and you can start ordering from Tattooed Chef again. So all of that FUD, all of that fear, uncertainty, and doubt that was spread about Tattooed Chef regarding the website being down, done. All right, done. I don't want to hear it anymore. It's done. And also with regards to Tattooed Chef, I was updating my Discord because we now have confirmation that we are in Miller's Market. You can order 3 of our Tattooed Chef products at the moment. I'm sure they're going to increase the amount of products that is available on their website going forward. Again, this might just be a trial period, but if Target, if Walmart, if Sam's Clubs is anything to go by, we're probably going to see a lot more Tattooed Chef products listed on Miller's Market. So this is very, very good for our top line. And as well as Miller's Market, we now also have confirmation on the Tattooed Chef website that we are on Albertsons. So this is something that Matt Williams mentioned during the Jefferies conference a couple of weeks ago. This is confirmation here. We do have products on Albertson because that's a place where you can go to pick up some Tattooed Chef products. So those are the Tattooed Chef updates that I have for you. Let's move on to the next stock. And the next stock is Alibaba, ticker symbol BABA. Now, I was buying Alibaba and I was actually complaining about Alibaba going up quite high because I picked up Alibaba about $215 a share, and then it ran up to $230 a share. And as you can see now, over the last 5 days, it's been on a decline. It's down 5% over the last 5 days. And on the Friday, it was down a further 1.86%. Now, why is this occurring? Why is Alibaba on a downtrend once again? And the answer is this. Okay, so Financial Times came out with this report a couple of days ago. It says Alibaba founders secure loans from global banks backed by company stock. Okay, Chinese billionaires Jack and Joe have pledged chunks of their combined $35 billion stake in the e-commerce group Alibaba in exchange for significant loans from investment banks. Okay, so essentially they've used their shares in Alibaba as collateral to receive loans from the likes of UBS, Credit Suisse, Goldman Sachs, and others. Okay, now this practice isn't really illegal. However, this is being painted as a negative because they did not declare it. Okay, so they have an example here. So, but while US companies are required to disclose shares pledged by executives, you know, as Elon Musk at Tesla, the electric car maker, has done, foreign groups listed there, so such as Alibaba, are under no obligation to do so. Okay, so Jack and Joe, Jack and Joe, almost like Jack and Jill, but Jack and Joe were under no obligation to disclose that they're using their shares as collateral. But it's being painted as a negative, especially when the likes of Elon Musk are and other top executives are. So it brings into question again the transparency of Chinese companies and Chinese executive with shareholders. I mean, this is predominantly why a lot of people boycott Chinese investments in the first place, due to a lack of transparency, the CCP, whatever your reasons are. But this is what puts a lot of people off. And, you know, Jack and Joe doing this doesn't really help the narrative. And as a result, I believe that's why we're seeing such a hard sell-off, especially on the Thursday. So this came out, I believe this article came out on Thursday, and the stock dropped, what, 4%, 4.5% into the market close on Friday. So what's my thoughts on this? I think they didn't do anything wrong, but I just think it just reinforces the narrative once again. And as a result, I think this could introduce a bit more pessimism into the stock. Is it enough for us to retrace and test $200, which I see as the next key support level using the Fibonacci retracement tool? Possibly, it is possible. And what will I be doing? I'm currently sitting on a small position. I have 30 shares and I would like to add a bit more. So if it does pull back and retest $200, I will buy 20 more shares, and that will be my position built, because I don't want it to be a large position. However, I do believe over the long term it will recover from this and continue higher. And in my previous videos, I've talked about the potential upside with Alibaba with regards to analyst estimates. So I would add another 20 shares and probably build my position to about 50 shares and then just hold. Okay, just hold. But that's the update with regards to Alibaba. Now, moving on, HIMS. HIMS and Healthcare Inc., ticker symbol HIMS. This stock has been battered. Okay, on Friday, the last trading day, it's down -5%. If you look over the past 5 days, actually not too bad over the past 5 days, but if we zoom out to a month, this stock is down 29% over the past month. Now, a lot of it is to do with the general market as well. There was a little bit of weakness towards the market close on Friday, and that's because, again, we had a long weekend due to Independence Day. And typically on long weekends, we see a lot of profit taken. So that was a contributing factor. However, the short volume in regards to HIMS is outrageous. And let me show you the short volume before we go into the massive change in fundamentals that I have seen. All right, so this is the HIMS channel within my Discord, and shout out to our programmer. We've got a bot in there that provides us with information like the short volume, the earnings, any news releases. This bot is on it. So massive shout outs to Pocket Rocket. He's our programmer. But I had a look at the short volume for HIMS, and take a look at this, investors. Okay. So the total volume on the 2nd of July, right, was 558,000. And of that, the short volume was 316,000. So that represented 56% of the total volume was short, okay? The previous day before that, on the 1st of July, 63% of the total volume was short. Going back on the 30th, 51%. On the 29th of June, we saw 66.22% of the volume was short volume, And on the 28th of June, we have 65.86%. Over 261,000 of the total volume was shorts, okay? So needless to say, the short sellers are in absolute control of this stock. And I think it's in part to do with HIMS missing out on the Russell 3000 inclusion. So that is a factor. However, when you look at companies like Palantir, all right, so Palantir, they were included in the Russell 3000, but they are down 9.3% in the past 5 days, okay? Even TTCF, a stock that I love, they were also included in the Russell 3000, but they were down 2.15% on Friday, the 2nd of July. So HIMS missing out on Russell 3000 inclusion isn't that major of a deal, but I think it's a contributing factor to why we are on a decline right now. Now, let's see the change in the fundamentals that has occurred, okay? First up, HIMS and HERS, we have partnered with Urban Outfitters to bring personalized health and wellness solutions to more consumers, okay? If you're not familiar with Urban Outfitters, they're one of the most popular fashion companies in the world, certainly in the UK, with over 522 stores in the United States, and they do have a considerable amount of stores in Europe, 78. They have 78 stores, approaching 100 stores, and they're also in Canada with 34 stores. I know Urban Outfitters is quite big in the UK because most college students or university students, they shop at Urban Outfitters. I've never shopped at Urban Outfitters, but then again, I'm not a person into fashion. I don't really care about fashion. I just care about stocks and property. But I do notice Urban Outfitters is popular amongst the millennials, the youth, and the millennials and the youth is the exact target market for HIMS and HERS. So this partnership with Urban Outfitters, I absolutely love it. And they said our priority has and will always be the consumer. At HIMS and HERS, we're trying to provide everyone with access to gorgeously designed, high quality, personalized and affordable products that benefit their health and wellness. Being able to expand our product to reach consumers through a partnership with such an iconic and inspirational lifestyle brand is incredibly exciting for us. We're truly honored to partner with Urban Outfitters and make HIMS and HERS solutions available to their digitally native and diverse audience via urbanoutfitters.com. Okay, so HIMS and HERS and Urban Outfitters plan to expand their offering in the coming months by introducing select HERS products and offering more HIMS solutions on Urban Outfitters. So this partnership is incredible. It's going to open up our total addressable market, and I think it's also going to increase sales, but more importantly, I think that's going to help grow our subscriber base. Because I shared this with my Discord, okay? I've created a little growth metrics tracker, and if you look at Q1 for 2021, we're sitting on 391,000 subscribers, okay? So that's where we were at Q1. I think with partnerships with companies like Urban Outfitters, if customers fall in love with HIMS products on Urban Outfitters, I think they're going to end up going to HIMS and then becoming a subscriber. And of course, with an increase of subscribers, that means that's going to be an increase in our top line. And with an increase in subscribers, that also means an increase in reoccurring revenue and an increase in our top line. So I'm a huge fan of this partnership. They have a mutual target audience. And I think, yo, great job to Andrew and the team. Now, not only this, all right, HIMS also expanded their UK footprint and they acquired London-based Honest Health. Okay, so this was in the announcement. Today announced plans to expand their UK footprint and acquire London-based vertical health platform Honest Health. Okay, Andrew has mentioned in the recent earnings calls that their plan is to expand. They are planning expansion right now, and this is how they plan to expand their footprint in the UK by acquiring businesses within similar industries to HIMS. Okay, the proposed transaction provides HIMS and HERS with best-in-class operational capability and infrastructure to support the beginnings of the company's long-term plans for expansion across the United States and Western Europe. Remembering what Morgan Housel said in The Psychology of Money about time being the most important factor for an investor, especially if you want to do well, this is their long-term plans. Expansion, and they're already making the moves right now. So have some foresight and increase your time horizon with HIMS, and I think you will do well in this stock over time. That's what I plan to do. Now, the financial details of the transaction will not be disclosed at this time, and I think I don't like this. All right, this is probably the only part of the deal that I don't like, the fact that they're not letting us know the details of the transaction. Like, how much did it cost for them to acquire this business? I think we'll find out in Q2, so we just have to wait until then. But I think this might be a little bit of a negative, and I think we've probably added to why the stock has sold off. All right. So you think this is it? Absolutely not. The fundamentals only got better. So on the 1st of July, they announced an online therapy session, which they're going to be able to provide via the app. Okay, so the telehealth provider HIMS and Hers is launching teletherapy sessions in 31 states. With plans to reach all 50 by year end. So not in 2022 or 2023. Our target is to be in 50 states by year end. Okay, so the mental side of our business is one of, if not the fastest growing category that we have, and that's the traditional psychiatric service, says the CEO Andrew. Both the HIMS and Hers branded sites will now offer a one-on-one 50-minute therapy sessions for $99 a piece. All right, which is quite significant, because taking you back to our growth metrics plan, as of Q1, our average order volume was $74. So now we're offering a brand new service that is in demand above our AOV. And what do you think that's going to do for our top line, especially if we are in all 50 states by the end of the year? Exactly. That's my thoughts exactly. So look, wrapping up, the fundamentals of HIMS has changed, significantly changed from when I was buying it at $12. But like most things, the stock does not reflect the fundamentals. Remember, Jeff Bezos has said many times that the stock is not the company and the company is not the stock. Despite all of the incredible news surrounding HIMS, all of these acquisitions, new partnerships, and also new services and products being launched, short sellers are still hammering this stock even lower. And for me personally, thank you. I'm going to continue buying. Now I'm at 850 shares and I plan to get to about 1,000 shares, and hopefully I'll be able to sit on my hands and not buy any more. But if this thing gets any cheaper, then it's going to be very tough to not buy anymore. But my target is 1,000 shares, so I have room to add 150 more shares, and I might do depending on how low this goes, because this is a complete steal right now, especially when you consider everything that we have spoken about in this video. So I hope you gained some value from this video. For everyone else asking for a HIMS update, this is the update. I wouldn't worry. I think the company is doing an incredible job. I think the biggest risk in this investment, in my opinion, is number one, competition. We do have a lot of competition, and number two, Andrew, the CEO, isn't that experienced, but I like him. I follow him on Twitter. I love his enthusiasm. He's young. He's full of ideas. I've watched a lot of his interviews. I would actually recommend this interview. He was speaking about how before they send out some of their products, they spray the box. So when customers open up their package, they get a nice fragrance hit them. Little things like this, you know, fresh ideas makes you stand out from the crowd. And personally, I'm backing this guy, okay? I'm backing Andrew. I think in the long term, he's going to do great for HIMS. But again, it is a risk, okay? He's not as experienced as many other CEOs. And that is one of the biggest risks you're taking with this investment. But that's my decision to invest in HIMS. And that's probably why I'm not going any heavier, because of the risks that I've identified. But I do like the industry. I do like the company. I do like the CEO. And yeah, let's see where this goes. All right. So understand the risks and allocate your capital accordingly. But remember, I am not a financial advisor, so none of this is financial advice. So please make sure you do your own due diligence. But if you gained any value from this video, please make sure you smash the like button, hit the subscribe button and the notification bell if you want to stay up to date with all of my latest videos. Plus, if you've ever thought about joining my Discord, now is the best time, because if you join now, you get the full month of July, and it'll be great to have you. So you can check the Patreon link in the description below. But with that said, thanks so much for watching, and I'll catch you in the next one. Peace.